Hello students, in this video we are going to learn final account of a partnership firm which is there in class 12. Now while making a final account, this is a list of account which you are going to make. You will make total 5 things. Students, in class 11 when you did a final account, you made only these 3 accounts: trading account, profit and loss account and balance sheet. This year in class 12 you have these 2 new additional account you have to make, that is profit and loss appropriation account and partners capital account. So these are the new accounts for you. We are going to focus on this new account in the next video. This class we are going to learn how to make a trading account. I know students, we have done in class 11, but just to revise and go in depth, I am explaining you trading account right from the beginning. So today in this class we are going to focus on trading account. And if you know students, in my previous video I explained you what to record in trading account. We always record direct expenses in trading account. What are your direct expenses? Purchase expenses and factory expenses. So these are your expenses which are direct in nature and will be recorded in trading account. This we did in previous video in detail. Now what comes in profit and loss account? Indirect expenses. What are your indirect expenses? Your selling expenses, then your office expenses, then your finance expenses. These 3 group of expenses falls under indirect expenses, and all your indirect expenses will go in profit and loss account. What to record in profit and loss appropriation account? Just take a note of this while watching this video. I want to sit with your notebook and just copy it down. What are the list of accounts you make, and also write down this bracket. These are rules actually, so take a note of it. Here we are going to record all partners expenses and income. So take a note of this. In appropriation account you are going to record partners expenses and income. I am going to explain you in detail each and every account. Okay. And in partners capital account you will record capital balances, drawings of the partner and salary to partner and many more entries. Again I am going to discuss it later. Balance sheet we record assets and liabilities. So these are the things which you record. So take down this note. In trading account you record direct expenses. In profit and loss account you record indirect expenses. In profit and loss appropriation you are going to record partners expenses and income. Partners capital account, capital balances of the partner, drawings made by the partner, salary to the partner, commission to the partner, share in profit and losses to the partner. All those things will be recorded in partners capital. Balance sheet you know very well, we record assets and liabilities. So these are the basic things. Take a note of this. And now I am going to explain you how we make a trading account. So I am going to give you a format for this, for making a trading account. So in this video we are going to focus only in trading account. So when you make a trading account, students, I want you to write in full trading account for the year ended 31st December, whatever year they have given to you in the sum. And you will make trading account with double column for amount, double column for amount, and always write in full. Don't write just trading account. You have to write in full trading account for the year ended. Don't write only trading account. write in full for the year and date, and you have to write it with the date. So writing date is very important. Particulars, amount, amount. So double column for amount. So let's understand the how to make a trading account, and these are the basic entries. All the entries will not be there in every sum. Only few of them will be given from this, but this will give you a big picture of what will come in trading account. So very first thing we record is opening stock. What is opening stock? Stock in the beginning of the year. So that you have to record on the debit side, and closing stock you will record it on the credit side by closing stock. So this is nothing but opening balance and closing balance. So opening stock you record in trading account debit side, and closing stock you record on the credit side of trading account. Now you record purchases. Why purchases comes on the debit side? Because purchases are your expenses. So on debit side you are going to record expenses. So purchases are my expenses. I will record on the debit side, and from purchases you have to minus purchase return, which is also called return outward. You have to minus this. Then what else will come? Your purchase expenses, carriage inward, then freight inward, then import duty. Import, if you are purchasing from some other country, you are spending on imports, so import duty. This is your purchase expenses while importing. Then what else will come in purchases? Import duty, octroi duty. So these are your expenses which you are going to record in trading account debit side. Why we are recording on the debit side, student? Because of the nominal account rule. What nominal account rule says? Debit all expenses. That's the reason you are writing all your expenses on the debit side. So these are your purchase expenses. As I explained you little earlier, all your purchase expenses you record in trading account. Then what comes for factory? Wages, then excise duty, motive power, power and fuel. These both mean same. These are your energy expenses, electricity bill, or you may be using a motive power generator. So these all mean same only, motive power or power and fuel. So these are your factory expenses. Excise duty means production tax. Students, sit with a notebook. You have to take a note of all this, because this will help you a lot while solving a sum. So excise duty means production tax. Also you take a note of this in your notebook. Excise duty means production tax. So what all these expenses we group it under? We group it under factory expenses. So these two nature of expenses will go in trading account debit side. Why debit? Debit all expenses and losses. So these are your expenses which you have recorded on the debit side. Now come on to the credit side, students. Credit side, you are going to write your income when you make a sale. Sales is an income for business. So sales will come on the credit side, credit all incomes and gains. Sales return, which is also called return inward. This will be deducted. Understood? Now, what else you can record here is whatever goods we have lost. We may lost goods due to natural calamities, or maybe theft, which may take place in our factory or office. So let's assume that goods of rupees 10,000 we lost it because of the theft or because of the fire which broke in our factory. So whenever you lose your goods, it may be because of the fire, because of the theft, because of the distribution of goods as a free sample. You have given goods as a sample, as a free sample for increasing your sales. So you have lost your goods. So again you will record it on the credit side. So all these things, or maybe it may be possible that your one of the partner is withdrawing goods from the business. So even goods withdrawn by proprietor will by a partner will come on the credit side. So I'm just writing it down one by one. So what I said goods destroyed by fire, then goods lost by theft, then I said goods distributed as free samples, then I said goods withdrawn by one of your partner in business. So these are the things which will come on the credit side. You may also remember this way, that these goods are going out of the business. So anything going out of the business, you are recording it on the credit side. Credit what goes out. So this is how you will record on the credit side. Now, when you record all this, you have to do totaling after entry. After all the entries, at the end of the entries, you will do totaling. Now totaling, you know students how to do. You will make a total of both the side, and you have to always take a note of big total. The rule is big total both the side. Whenever you do totaling, there are two rules of totaling. Whenever you do totaling, there is two rules. Rule 1, big total both side. Big total both side. So I have to write big total on both the side. And rule 2, difference on small side. So you may get a difference on the debit side, or it may be on the credit side, depending on how much is the total. Let's take one example. Suppose your credit side total is 50,000. Your total of credit side is 50,000. Your total of debit side is 40,000. Now, this is a big total, this is a small total. As I said, what is my rule of totaling? Big total both sides. So what I will do as per the rule, 50,000 is a big total. You will write 50,000 on both the side. Big total both side. This is the trick to remember. Big total both the side. Now, debit side total is 40,000. So what is our rule 2? Difference on smaller side. So which side is small? Debit side is small. So you will write difference on the smaller side. So difference will come on debit side if your debit side is small. And if you are writing on debit side, you are going to write it as gross profit carried down. So what will be your difference in our example? 10,000. You will write 10,000 in the difference and you will write it as gross profit carried down. Am I clear? Also, it may possible that your credit side total is less and debit side total is more. So big total both the side, and if credit side is small, write difference over here. So what I am calling difference as, this is your difference. When you minus debit and credit total, you get difference. And where to write difference? On the smaller side. Whichever side is small, you write down the difference. If debit side is smaller, write difference on the debit side, write it as gross profit. If your credit side total is less, write difference on the credit side and write it as gross loss carried down. So this is how we do totaling. This is the maximum entries which can come in trading account. Also student, one more trick here. Anything which is related to goods will go in trading account. This is a trick to remember. Even this, what are you selling? You are selling goods. Closing stock, it is a stock of goods. So all goods entry will come in trading account credit side. Remember this way. So credit side, it's very simple. You record only goods on the credit side. Don't write any expenses over here. You will always write goods. And goods का कितना entry possible है? There are 1, 2, 3, 4, 5, 6. 6 entries which are exhaustive, which will be recorded only on the credit side. Goods ka entry only. Don't write any other entries on the credit side. Credit side is very clear, crystal clear. Write only goods. And how many maximum entries are possible? 6 entries, all related to goods. 6 entries only, and all the entries are of goods. No entry will come other than goods. Am I clear with this? And debit side, you record your opening stock purchases, purchase expenses and factory expenses. Thank you, students.